In the same way that GameStop stock has been one of the most volatile investing topics in 2021, the Securities and Exchange Commission, SEC, has been steadfast in its efforts to thoroughly identify actors seeking to manipulate the stock illegally for personal advantage. Throughout the year, trading platforms like Robinhood and well-known traders like TheRoaringKitty, Gill have been scrutinized in congressional testimony. The SEC appears to have subpoenaed Michael Burry, a well-known investor and the CEO of Scion Asset Management, as part of its inquiry. What exactly has happened? Legendary investor Michael Burry, whose bullish attitude on GameStop sparked the so-called meme stock frenzy earlier this year, stated on Twitter that the SEC has presented him with a subpoena over the video game retailer's stock. According to Burry, SEC has subpoenaed him to testify about ongoing concerns in the GameStop stock controversy. Burry, who was famously depicted in Michael Lewis's book The Big Short and the film based on it for correctly anticipating a real estate bubble implosion in 2007, was significantly long on GameStop shares. The hedge fund manager increased his stake in the retailer to more than $17 million at the end of the third quarter of 2020, before selling in the fourth, missing out on retail-driven rally earlier this year. However, his bullish 2019 statements to Barron's, in which he stated that new consoles from Microsoft and Sony would extend GameStop's life significantly, sparked a spike in the company, which may have aided investor mood during the 2021 boom. Burry termed the trade unnatural, insane, and dangerous in January, when amateur speculators drove GameStop stock up, squeezing hedge fund investors who were betting against the firm. He added that there should be legal and regulatory repercussions. The SEC's interest in Scion Asset Management is unclear, and representatives for both the firm and the agency did not respond to the Washington Post's request for comment. In May, GameStop announced that it had received a voluntary request from the SEC for information related to the trading of its stock and shares of other companies. SEC head Gary Gensler said earlier this month that the agency is nearing the release of a highly anticipated report detailing the trading frenzy that pushed shares of GameStop, AMC, and other firms higher. In the midst of record market volatility, he's also anticipated to issue recommendations on what, if any, modifications should be made to the U.S. trading system. In lunchtime trading last Monday, GameStop shares climbed 3% to more than $190 per share, considerably beyond the price targets of the few remaining Wall Street analysts tracking the business. The drama of GameStop continues. The GameStop drama continues 8 months after the catastrophic short squeeze, with retail investors holding up the stock much beyond analysts' price forecasts. Only a few analysts continue to cover the name, with many abandoning it after the meme craze took hold. Ascendant Capital Markets, a Wall Street research firm, reduced GameStop's price objective to just $24 on Monday, citing rising competition in the digital gaming industry. In a note, analyst Edward Wu wrote, "Reddit trading expected to push stock near term, but likely to fade in 1 year as digital risks increase. We remain very concerned about GME's core video game business's long-term prospects as hardware sales level off as the installed base matures." Investors are anticipating a report on the Reddit-fueled trading frenzy from SEC Chair Gary Gensler, as well as his suggestions on what, if any, modifications should be made to the U.S. trading system. SEC on a roll with scrutiny of major investors. Michael Burry has already deleted the tweet that revealed his subpoena, but he isn't the only major player who has recently come under the SEC's scrutiny. The SEC has charged investors Soo-Yoon Gu and Yong Lee with a fraudulent stock options transaction scam. While GameStop was not specifically named in the allegations, it is easy to assume that they profited from the disruption created by GameStop and subsequent meme stock volatility. Fortunately, Keith Gill, aka TheRoaringKitty's old employer, MassMutual, was penalized by the state of Massachusetts for failing to monitor his trading behavior during the most volatile period of GameStop stock's history. Throughout the drama, GameStop has kept relatively silent, refusing to allow Q&A sessions in its quarterly earnings results even as it transfers its business farther towards e-commerce as its stock value soars. Given that Burry is expected to come before the SEC, it will be fascinating to watch what, if any, action the SEC takes against the well-known investor.